So let's get into it. Okay, so mortgage rate spike. With the 30-year mortgage rates now hovering around 7.5%, levels unseen in decades, are we seeing in the early stages of a housing affordability crisis?
I don't know. We would have to ask Matt, but given the bond crisis that I've been talking about for a while, a couple interesting things. There's $350 billion in interest we're going to have to pay if we don't end up refinancing. And then when they had the Treasury auction last week, not no one, but virtually no one wanted to buy our bonds. So as a result, I think that rate will stay for a while. If I was the Fed chair, I would not want to have this job right now. But the Japanese bond market is going through a crisis. So are we. We can talk about the bill or if Doge is being dismantled through this bill now. But there are a couple of things on the table where I'm like, I don't see how we begin to correct this. So over the next, I think they said 10 years, we're going to be paying $5 trillion in interest. I don't know how you correct that. AI is partially of a small part of the answer, but we have to get this under control before we lose our lead permanently. What do you
Yeah.
guys think?
I mean, it's our highest rate since the early 2000s. I remember
Yep.
being in the pandemic and saying, man, 2.85, that's incredible. And now we're here at 7.5 just a few
It's
years
insane.
later. It's a tough position, right? Like the affordability situation in America is becoming almost unsustainable, right? When you're talking about who's going to be buying homes, what demographic of the population is going to be coming into home buying. If wages aren't increased and housing prices going up, that doesn't make for a great formula. On the other end, when you're talking about people who are selling homes, when interest rates or even refinancing, when interest rates are this high, you find that people aren't doing any of those things. So the supply becomes an issue, affordability becomes an issue because wages are an issue. The only way I see going forward to be fit with the situation is policy is going to have to be put in place, whether it's going to be a new declaration on how interest rates are going to be levied over a 5-10 year span. Because if we're looking at debt, like you just brought up, from an institutional standpoint, but even from an individual standpoint, like the amount of debt that people are accruing from college, from credit, those numbers are going to start to creep in over the next 2 or 3 years. I know it's kind of been hitting back, and obviously student loan was on deferment for a few years here, but that number is going to be accounted for very shortly. And so when you add that into this problem, housing, it's going to be an issue unless new policy is put in place.
Like, what affordable big cities are there for people to live in when the cost of housing, like you said, is going up so high and everything needs to be refinanced at scale? It's very scary. One more note. The Japanese bond auction was the worst since 1987, which is that Black Friday crash. There's a lot of things on the board right now that are just incredibly scary, and I don't know if anyone has planned correctly on how to fix it.
Yeah, for sure. And I will say this when it comes to mortgages. Shout out to Matt.
Shout out to Matt.
Because yeah, he's definitely a talented mortgage broker. And he's one of these people that actually does the business. Like, he's not just a social media influencer. So like even me, like, he's helping me out. I think I might have mentioned this before, but I actually have a property that I purchased in cash. And I'm doing a cash out refi. So this is information for anybody that's interested. If you own a property, you can still refi a property that you don't have a mortgage on. And the benefit with that is that so it's like I got this property at auction. Well, kinda. It's a long story, but it was way under market value.
Wait, you invested in another piece of real estate after telling people not to invest in real estate?
Shame.
The Jamie Dimon play.
Shame.
Oh,
shame.
So I was able to get a property way under market value.
That's amazing.
But with the cash out refi, thanks. When they do an appraisal, they appraise it at what the current price is. So long story short, if everything goes according to plan, I'm not done yet. I'll update you when it's over. But it looks like I could potentially maybe get more, slightly more, or at the very least, like around the same that I actually paid for the property.
Yeah.
So that's helpful because that's like, if you buy a property for 280 and then it's worth 400, then you actually can get 280 back or 300,000, right? That's beneficial because now, I mean, of course, you actually have a mortgage on it, so you got to pay monthly. But if you have a tenant, then they could pay that via their rent. But even if you don't, you're able to have capital that you can do other things with, deploy into the market, reinvest, buy more real estate if you're interested. So cash out refi, I don't think we spoke about that before, but that was something that I wasn't fully aware of, and he actually educated me on it. So once again, shout out to Matt. But that's pretty powerful tool in the disposal when it comes to real estate. So you always have options when it comes to real estate.
Does the interest rate become higher because of cash out refi?
Well, remember, I don't have an interest rate right now because
I'm saying when you do it,
it's whatever the interest rate is.
Oh,
it's
so
not
like
it's like
higher.
It's like buying a new home.
Okay. So like if it's 7.5 is the rate right now, then 7.5 is the rate that you're getting.
Yeah.
Okay.
So yeah. Matt definitely is somebody that's extremely knowledgeable when it comes to real estate, home buying, and there's so many different things, right? Like there's so many different stuff that we're not educated on. That's why the Home Buyer's Blueprint is vitally important, EY University. But that when I found that out, I was like, damn, that's kind of crazy. Like, because imagine if you could just go around buying auction properties at low prices, and then doing some quick, or even like fixer up, right? Then increasing their value very, very quickly, and then doing cash out refis, and then getting more money than you actually paid for it. Put a tenant in there, have the tenant pay the rent, which is covering the cost of the actual new mortgage that you actually have. But now you have new money that you can buy new property with, right? Like you can scale in my mind, you can scale a real estate portfolio relatively quickly in that type of scenario.
Yeah, especially if you have cash or you're a high net worth individual.
Yeah,
it's a good way to scale.
Yeah, and solid credit too, right? Because if your credit is,
you got to have credit.
Is in shambles, that 7.5 is going to look a lot higher than that.
Well, I mean, at this point in time, nobody's credit should be in shambles.
You would be surprised.
No, I'm saying as far as the information, like we have enough information out there to clean your credit, right? Like, the bad credit epidemic should be coming to an end.
I hope so.
For some, I got a few calls over the past couple of weeks from entrepreneurs.
Yeah, I was gonna say you would be surprised in entrepreneur class.
Yeah, but even the other part of it is this student loan. These people who are now just graduating. I know we spoke about graduating last episode, but think about it now. Like the kids who have come out of college over the past 2 or 3 years, who have been in deferment, who've had their student loan suspended, and now are having to pay. What that effect will be on their credit going forward, right? If they default on that. So yeah, I mean,
in addition to credit card debt,
the education process never stops, man.
Car note, and that's a great point. No matter how, because you may have a plan now, but as you scale and that lifestyle creep seeps in, it's a lot of people that are owing $30,000 and $40,000 a month. You'll be surprised. Yeah.
Yep.
So.